Hello guys, today I'm gonna take you through the trades that I took today and how I use the new concept, which is the Dr IDR by the master. I will put the link of his YouTube channel in description. I haven't tested it yet, but as people are saying, it's a really good tool. 88% probability is a lot. And I'm testing it day by day. The master says in his videos that it should not be used with um, high impact news days like today. There it is, we have high impact news at 2:30, so it should not be used on news days, but I have it as an indicator, which is also by the master. The indicator is called Dr IDR V1 by the master, and I'm gonna show you the trades that I took today using it and using the smart money concept. So let's get into it. First things first, this is the 9:30 open. My timing is not New York, but 9:30 open is here. This is the 15 minutes time frame. This is the DR right here. Let's go to the 5 minutes because we should use it on the 5 minutes. Guys, if you want to know more about the DR, you can go to the master's YouTube channel and you can see the videos about it. I'm gonna show you right now how I used it today. This is the 5 minutes time frame. Okay, we closed below the DR, which means that this is the high of the day. It's the high of the session. Okay, that means our probability to take low sells would be much better, and the probability for the price to go above this high is very low, which would be a good stop loss, but that's not how I used it. Okay, let's see what happened here. We broke structure, as we can see. You can see this is like a C candle, which is sponsored candle. This one, which caused the break of structure. Okay, we are below the DR IDR. Okay, this is the break of structure. We broke here again. Okay, when we broke these lows, we have this fair value gap right here. This is the fair value gap. So the IDR helped me with understanding that this will be the high of the day. Okay, we closed below it, that means we are bearish. So this gives me more probability that we're gonna go lower. Seeing the price break is also a bigger probability. And after I saw this retest here, I was waiting for some other confirmation. When we broke this swing low right here, and then we retested the fair value gap, this is where I put my entry, and I put my stop loss above this high. I can target the lows. Okay, there's also a fair value gap on the 1 hour time frame right here. As you can see, so this is my target basically, but let's stay in this trade for now. This is the 1 minute time frame. That's how you can go lower in time frame and get a better RR. Okay, so this trade is something like that. Okay, as we can see, it went back up, it took the liquidity, and then went straight to TP. It went a bit lower, but I took profits here. I didn't take profits down there, I took my profits here. Okay, this is the first trade. The second trade, this was an interesting trade because I actually took a loss on this trade, but that's just because of my psychology, because of my impulsive trading. Instead of taking it at the position I wanted to take it, I took it at the breakout. And even if you have an idea, the right idea, if you know, even if you know the price, where the price wants to go, that doesn't mean you're gonna make money. You have to wait, you have to execute properly, plan and execute it properly, and understand that it is okay if you miss the trade. It is okay if you miss the trade. Capital preservation is also a win. It's hard to implement it, but that's the reality. Okay, let's keep going. As we can see, there's a fair value gap here. Our bias is bearish, but what made me take a long on the next trade is this. Let me go to the Nasdaq, and also, as we can see here, this is the 1745 candle. This is the 1745 candle. This is not New York time, but bear with me. We need to understand the concept. Doesn't matter. So, as we can see, this is the Nasdaq. We made a higher. We didn't go below the swing low, which is this one. We were higher, but look at the S&P 1745 as well, also not New York time, and we went below. And this is on the 15 minutes time frame. 15 minutes time frame is the one used for the SMT divergence. We cannot confirm it unless it's on the 15 minutes time frame. It gives enough time to confirm that it is an SMT divergence. As we can see, high to low, low to high. Okay, this gave me some confidence that we're going higher, and this is a liquidity grab. So I started looking at the price with my bias being long. Okay, as we can see here, we broke this swing high, and from here I was looking for buys. So I wanted to see where can I buy. We have a fair value gap here, but as you can see, we actually retested that, so we might not go back to it. And then I saw this, which is a sponsored candle that caused the break. When we broke above it, this becomes a breaker order block. Of course, if you want to know about that, you can go to ICT and learn more about it. So my idea was to buy here with my stop loss below these lows, and my TP above, basically somewhere around here, above this high, 2.2 RR. This was my plan, but when the price came here, I thought that, okay, that's it, we're going up. And I wasn't on the PC. I came and I saw that we already retested it, and we are up here with a lot of momentum. So I entered my trade here, and I put my stop loss below this order block, and it stopped me out. And even though I had the plan right, I still lost the trade. And as we can see, eventually it did play out. It could have been in a good trade from here. Yeah, basically from here, 2.2 RR. So the idea was good, the idea was great, and we still lost money. So it is what it is. Okay, now next to my third trade, and this is how the IDR helped as well. This is the low of IDR. Notice how we are gonna react from this. look at this reaction from the low of the IDR. I'm just still testing this concept. It's new, but so far so good. Okay, let's continue to the last trade. Okay, we did break here. Now basically my bias is bearish, because as we can see, boom, it's a big liquidity grab. Okay, and our target hasn't been met yet. Sorry, our target with a 1 hour fair value gap. So that's my target. So what happened is I waited for the 5 minute, and as we can see, very big impulsive move on the 5 minute. We broke structure right here. Okay, we broke structure right here, and then I saw, let me remove this, remove this, remove this. I saw this fair value gap on the 5 minute time frame. I went down to the 1 minute time frame, and I can see that there is also here a small fair value gap. Whoop, the price goes right into it. So confirmation from the 5 minutes and from the 1 minute. Let's see what happens next. So if you didn't enter here already, you can enter here as well, because we, as we can see, there was here a small fair value gap, and we could have entered here. My entry on this trade was on this fair value gap right here, my stop loss above these highs, and my target, the fair value gap 2.2, 2.3. And this played out very nicely because of the time of the day, and because of the impulsive move. It was very impulsive. We have a 15 minutes liquidity grab. As we can see, we have a 5 minutes break of structure right here, and we have a nice retest of the fair value gap. This is how everything played out basically. Let me write them down. So IDR, which sets basically the bias, liquidity grab, break of structure, entry technique, entries. It could be breaker, fair value gap. Now to make this bigger, let's say. So this trade ended up going to the middle of the fair value gap, so this could have been easily 1 to 4, but 2% and almost 2%, almost 4% together, -1, 3% for the day. That's great. So that's it, guys, for the day. Please let me know if you like the video, and if you would like me to make more videos like that. Let me know if I addressed everything properly, you want me to change something in explaining, and if you want me to make more videos like that, please subscribe and like, and see you in the next video.